Thanks for joining us. I'm Marlon Bowling with you on Report Day. USDA comes out with their crop production and their supply and demand report in just a little bit. It'll be a little over an hour from right now, and the trade is getting busy anticipating those numbers, getting positioned before the report comes out. Let's take a quick look here at the corn market right now, see where we are. We have December down a penny and a half today at 365 1/4 per bushel. On the soybean trade right now, you have your November contract there. This would be your new crop soybean futures. They are down 10. They're getting hit fairly hard today at 821 3/4. And in the wheat market, wheat actually rebounded early this morning. We'll start with Chicago wheat, where we have December now 8 3/4 higher at 527 1/2, and that's actually within about a penny and a quarter of our high of the day. We're a dime off our earlier low now. And Kansas City wheat, we have December now trading. If we can roll over to Kansas City here, let's take a look at that December contract. We're at 529 3/4. That's up 7. And in Minneapolis, we currently have that December contract 7 3/4 higher at 583. Let's go to Scott Gecas. He is with Longleaf Trading, and he joins us right now from the edge of the trading floor in Chicago. And all right, a little bit of a rebound in the wheat market here, but a sell-off in the soybeans ahead of the report. And some traders thought they had built enough bearishness into the trade already ahead of the report release. Apparently, there's more to go yet.
Yeah, and it looks that way. And just to give you a heads up, the option market is confirming that. Yesterday, the 820 puts, they doubled their open interest. So that's very significant information. Expecting a little bit of pullback. I've been talking for the last few weeks about that 825 level. We pierced that this morning. Seen a very strong volume in those 820 puts. We're going to see how this report comes out and shakes up. But right now, everything is pointing to the downside for soybeans.
All right, the trade on the early estimates for this report, when you look at the U.S. ending stocks, the carryout numbers, trade is looking for soybeans to be 836 million bushels. Put that in perspective. How big would that be?
Yeah, that's pretty significant, and it's actually high on the high end. If we hit around 900 or more, you know, you're going to see a very sharp pullback. We could start seeing ranges in the 7-handle area.
All right, when you look at a soybean chart, technically, I mean, how much trouble is it in? Does it have support anywhere nearby?
Well, right now, on a technical level, without any information, no, it doesn't have any support below or above 800, so, or the $8 level. But we got to wait and see how this report is going to come out. If there's any surprises, you can see a really big bounce, or if it comes in as expected, we should be testing the 7-handle.
Okay, we'll come back in just a little bit here, Scott, and we'll examine our livestock trade as well. We had a firmer start to the cattle market. We'll see if that continues in just a moment. We're talking with Scott Gecas, and we'll be right back. All right, let's take a look at our livestock trade right now, and we'll go to the trade in Chicago and find out what live cattle prices are doing on the futures board. Well, live cattle started out and they had a little strength this morning. They're coming off of those highs a little bit at the present time. We have the October contract at 109.62. That would be 32 cents higher. Now we have December trading 55 higher at 114.48. And February 30 higher at 118.70. So still higher on the day, just not quite where they were an hour ago. Now let's take a look at the feeder cattle market. On the feeders, we have September up 76 at 152.88. The active October contract is up 53 cents now at 152.98. It had gotten as high as 153.10, slid back away from that a little bit now. November up 37 at 152.80. Lean hog trade. This has been all over the place the last couple of days. We have the October now 44 higher at 54.92, and you have December lean hogs currently $0.50 higher at 54.60 after being as high as 55.45 a little bit ago and as low as 54.02. So they've had a fairly wide trading range, about $1.40 wide. And currently we're within about 55 cents of the low of the day again, but still higher from our close yesterday. Scott Gecas rejoins us now. He's at the edge of the trading floor in Chicago. And what do you make of the market action that you're seeing here in the cattle and hogs today?
Yeah, in the cattle market, it's a very odd dynamic. So we have short-term supply concerns with Hurricane Florence coming through. It's expected to shut down a lot of restaurants. People are not going to be grilling this weekend. So you have that short-term supply concern. The cattle market in general has been waffling back and forth between 110, 107.50. Cash traded around 107. We're going to stay bullish above that 110 area. We're just waffling back and forth, not really seeing too big of a volume pushing it one way or the other. In the hog market, it's a very odd dynamic. So Hurricane Florence is putting pressure on cattle prices where it's going to be supportive for hog prices just because it's going to have to make all the restaurants restock the refrigerators. So with the African swine flu also taking effect, report after report, it's spreading. They can't contain it. We're seeing the transport of pork in China. It has been banned in 10 different regions. That's a very significant stat. So we're going to watch and see how that is going to be playing out. One thing I want to point out in the hog market is right on the close yesterday, there was a decent sized trade go up. People were buying futures and buying the 55 puts. So what that means is they're just protecting the upside with those puts, with room to run to the upside with the futures.
Okay, I have a question for you. Let me see how to phrase this. The plants that are shutting down, they ceased slaughter operations yesterday at the Smithfield plants in the Carolinas. They're going to be processing today, and then they shut down for the rest of the week. And Smithfield is majority owned by China, right?
Correct. Yeah,
so
and you got to remember,
12.5% supply thing, right?
Yeah, and 12.5% of the U.S. pork does come out of the Carolinas.
So if China has the African swine fever outbreak, and they own the plants here, but they're being shut down, they're going to kind of be in a bind, aren't they, for pork moving forward?
Yeah,
here?
you would think. Yeah, but the market, for whatever reason, is not reacting to all that positive news.
Would that have a long-term impact?
The discount or the premium for futures on the back end in December, it's definitely showing that.
Interesting stuff. All right. Thanks, Scott, for visiting with us. We'll have to keep a close eye on that. I appreciate that very much. Scott Gecas, he's with Longleaf Trading, and he is located right there in Chicago.